Hi guys, Mortgage Mark. Let's talk about second liens and just kind of the rest of what you might need to know. First and foremost, from a credit qualifying piece, it's probably a little bit less than our standards. They're not quite so regimented as far as, hey, we have to have or need this, which by the way could also mean they may require something that we typically don't or won't. That's rare, but for the most part, it's a little bit lighter process. In terms of fees, it adds about, call it $700 to $800 in closing cost. For an independent, like a home improvement or a home equity line, you might find that the fees can be lower, like $500, and on occasion, maybe even free. Literally, some banks will run promotions to do free. So from a closing cost perspective, it should be relatively inexpensive compared to that of a normal first lien mortgage. Interest rates, they're going to be higher because they're in second position. So if somebody were to get foreclosed on or default on a mortgage, the first lien gets paid first, and then what's left over goes to the second. So there's a little bit more risk. So second lien rates are in fact going to be higher than that of first lien rates. Second liens will have their own set of documents that you'll have to sign at closing. So if you're getting a mortgage with us, like a first lien position, you'll also have a separate package, more paperwork for a second lien. You also might find that the bank or institution might require you to be a member, like if a credit union were to be the ones offering you the second liens. By the way, your mortgage professional will recommend outlets for you for a second lien. But if it's a credit union, because they're just offering smoking good rates and we want to put you there, they may require you to be a member. So just be aware of that. A lot of times it just means you have to have $1 in a checking account with them. The other piece you need to know is that the first payments for second liens is going to potentially differ than that of your first lien mortgage payment. So don't be surprised if you close on the 23rd of a month that they're going to require your payment due on the 23rd. It's kind of crazy, but it's what they do. Lastly, guys, be aware there may or may not be a prepayment penalty with the second lien. A lot of times the second lien lenders will want you to at least have the loan for common is 12 months. So if you're going to pay it off prior to 12 months, they may come after you for a few bucks that says, hey, you prepaid us and we want some extra dollars back. So just be sure you're talking to your mortgage professional. A lot of times with a prepayment penalty, you're getting a better rate. So maybe it's worth it if you don't plan on paying that off in the first year. But again, talk to us, call us, let us know how we can help.